Is it really possible for an African country to compete economically with the United States? For decades, the world has looked at Africa through a narrow lens, often seeing it only as a continent in need, a place dependent on help from the West. But what if that narrative is completely wrong? What if Africa holds untapped power and potential that the world has barely begun to notice? Right now, one nation is proving exactly that and shaking the global stage: Ghana. In a move that stunned economists and investors everywhere, the Ghanaian Cedi has just done the unthinkable. It beat the US dollar, rising to become the best performing currency in the entire world. This isn't just impressive, it's shocking, and it offers a glimpse into a new future where African nations aren't just trying to survive. They're poised to thrive, to lead, and to rewrite their own stories. But how did Ghana achieve this financial miracle? How did a country that has wrestled with inflation and economic challenges suddenly turn its currency into a global powerhouse? Let's dive deeper into this incredible story and find out how Ghana may have just changed the game for an entire continent. Earlier this month, Ghana's President John Mahama sent a powerful message straight to the White House. His words were bold and unmistakable. It was time for the United States to stop meddling in Africa's affairs. But this time, Mahama didn't speak with words alone. He let Ghana's economy do the talking. In a stunning turn of events, Ghana's Cedi has surged ahead, beating the US dollar hands down. Reports reveal that the Cedi has gained nearly 50% against the dollar in 2025, making it the strongest performing currency anywhere in the world this year. At the start of the year, one US dollar traded for 14.7 Ghanaian Cedis. But by the end of the first quarter, the exchange rate slipped further to 15.5 Cedis per dollar. Then, everything changed. Through most of May and into June 2025, the Cedi has been on a relentless bull run. Now, it stands as Africa's strongest currency, leaving many stunned. This comeback is nothing short of astonishing, especially considering that back in 2022, the Cedi held the unwanted title of the world's worst performing currency. That year, it lost over 55% of its value as Ghana battled a brutal inflation crisis and crushing sovereign debt. Today, the tables have turned, and the surge has caught US analysts completely off guard. Some are scrambling for explanations. Investment giant JP Morgan believes Ghana's spectacular rise is tied to gold. The precious metal has shattered records 28 times in April alone, driving new wealth into Ghana's economy. Others see additional forces at play. Hasnain Malik from Telemer credits Ghana's disciplined IMF program and tight monetary policies for fueling what he calls an extraordinary spike. Whatever the reasons, one thing is clear. Ghana has stepped onto the world stage in a way no one saw coming, and it's forcing the world, and especially the United States, to pay attention. Yet another voice has weighed in on Ghana's incredible currency surge. Lutz Rumeyer, head of portfolio management at Capitulum Asset Management, believes there's another powerful force at work. He points out that local Ghanaian holders of US dollar debt have been exchanging their dollars back into Cedis, further fueling the currency's dramatic gains. But while foreign analysts scramble to explain Ghana's financial miracle, what are the experts inside Ghana saying? At the Ghana International Trade and Finance Conference, a 2025 report was released, shining a spotlight on the forces behind the CDI's unstoppable rise. According to the report, there are 4 crucial factors driving this transformation. The first, and perhaps the most critical, is the success of Ghana's debt restructuring. Since December 2022, the Ghanaian government has launched a sweeping plan to reorganize its massive debts. This process hasn't been easy. It involved local currency bondholders, official bilateral creditors, and commercial lenders, all brought to the table under the G20's common framework. Against the odds, Ghana pulled off a domestic debt exchange, securing around 85% participation from eligible bondholders. It didn't stop there. The country reached a historic restructuring deal with its official creditors. All 25 members of Ghana's official creditor committee signed a memorandum of understanding, covering roughly $5.4 billion in bilateral debt. And there was more. Ghana struck a deal with over 90% of holders of its staggering $13 billion Eurobond portfolio. a major milestone in its quest to restore financial stability and regain investor trust. This was the first domino in a chain reaction, one that's now reshaping the entire economic future of Ghana, and possibly all of Africa. The second force behind Ghana's currency revolution lies in the world of commodities. In 2025, the prices of gold and cocoa, two of Ghana's economic lifelines, have surged upward, breathing new life into the nation's foreign reserves. Ghana's gold reserves alone have soared from 22.3 tons to an impressive 31.2 tons as of April 2025, and it couldn't have happened at a better time. Gold prices have been smashing records on the international market, delivering a crucial boost to Ghana's economy. These growing gold reserves have become a powerful weapon, strengthening Ghana's foreign exchange position and shoring up external liquidity when it matters most. The third factor comes from inside Ghana's own financial system. The Bank of Ghana has stepped in as a stabilizing force, deploying strategic liquidity measures to protect the cedis. As part of its bold actions, the central bank has injected over $490 million into the foreign exchange market. This move has been pivotal, easing short-term demand pressures and restoring vital confidence among traders and investors alike. And finally, there's the fight against speculation. Ghana has cracked down on the kind of speculative activity that can send a currency spiraling out of control. Today, daily exchange rates are no longer left to guesswork or rumor. Instead, they're calculated using a weighted median of actual transactions on the interbank forex market. This new method has brought greater transparency, sharper price discovery, and a level of market efficiency that Ghana has never seen before. These four factors, working in concert, have transformed the cedi from one of the world's weakest currencies into a rising star, and they've left the world watching and wondering what Ghana will do next. But Ghana's financial story doesn't stop there. Another crucial piece of the puzzle has been a sharp drop in inflation. By April, the inflation rate had eased to 21.2%, a significant relief for an economy that once teetered on the edge. Behind this success stands the Bank of Ghana, wielding bold policies to defend the cedi. In March, the central bank shocked markets with a surprise 100 basis point rate hike, pushing the policy rate up to 28%. These aggressive moves weren't just numbers on paper. They were aimed at taming inflation and making Ghana more attractive to foreign investors searching for stability and growth. Yet perhaps one of the most remarkable forces reshaping Ghana's economy is something few outside the country fully understand: the rise of Ghana's gold bod. Thanks to the gold bod's innovative operations, Ghana's export earnings have skyrocketed. One key policy has made a huge difference. Domestic gold purchases now have to be settled in cedis before any gold can be exported. This simple but powerful rule has driven Ghana's gold reserves from just 9 tons in late 2023 to a staggering 31 tons today. As a result, the nation's foreign reserves have surged, hitting a record $11.4 billion in March 2025. It's nothing short of remarkable. The transformative power of the gold bod isn't just a theory. It's a view strongly echoed by Ghana's finance minister, Dr. Cassiel Ato Forson. At the official inauguration of Gold Bod's governing board, Dr. Forson declared that the cedi's recent appreciation was no accident. It was the product of what he called a robust and coordinated policy framework, powered by the operational success of the gold bod. The gold bod has already begun to fulfill its object and has contributed immensely to the recent stability of the Ghanaian Cedi through gold reserve accumulation, Dr. Forson proclaimed. He went further, revealing how the creation of the gold bod was a major policy initiative personally championed by President John Dramani Mahama. For too long, he explained, Ghana's gold trade was plagued by fragmentation, unregulated players, and rampant smuggling, leaving the country starved of desperately needed foreign exchange. Now those days could be coming to an end, and Ghana is showing the world that with vision, discipline, and bold reforms, an African nation can rewrite its economic destiny. That chaos has come to an end. Those were the powerful words of Ghana's finance minister, Dr. Cassiel Ato Forson, as he announced a new era in the country's gold industry. He revealed that the gold bod is now the sole buyer and official assayer of gold, with exclusive authority to license all gold trade coming from Ghana's small-scale mining sector. For decades, Ghana's gold market was a maze of overlapping players. The Bank of Ghana, the Precious Minerals Marketing Company, the Minerals Income Investment Fund, and countless private entities all operated in fragmented silos. But Dr. Forson declared that those days are over. With Goldbod at the helm, Ghana's gold market has been brought under one roof, transforming a disjointed system into a unified strategic operation. This paradigm shift will challenge traditional models reliant on old patterns, Dr. Forson remarked. He explained that the formalization of the gold market would allow for more accurate economic forecasting and stronger buffers of foreign exchange. In his eyes, gold is no longer just a mineral dug from the earth. It has become a strategic national asset. As Africa's leading gold producer, Ghana must now fully harness its gold potential to support economic transformation, he asserted, his words carrying both conviction and hope. Looking forward, Dr. Forson expressed unshakable confidence that Goldbod would play a crucial role in driving sustainable economic growth and ensuring a stable currency environment for Ghana's future. Now, because of Ghana's remarkable economic turnaround, the cost of the country's foreign debt has begun to shrink dramatically. We have reduced our total debt over the last 5 months by almost 150 billion cedis, which is very significant, Ghanaian President John Mahama revealed this week. He was speaking during a session at the African Development Bank's annual meeting in Abidjan, proudly pointing to the Cedi's newfound strength. If this momentum holds, Ghana could hit its ambitious target of reducing its debt-to-GDP ratio to between 55% and 58%, not by 2028 as originally planned, but by the end of this year. And for President Mahama, that opens up an entirely new frontier for Ghana. That means it begins to give us fiscal space to begin to invest in the most productive sectors of the economy, he explained, his voice echoing with a mix of relief and vision. It's nothing short of remarkable, and much of the credit has been laid at the feet of President Mahama's administration. His government has rolled out sweeping reforms, not only steering the economy back from crisis, but also maintaining crucial political stability, a key ingredient in the Cedi's resurgence. But even as optimism pulses through Ghana, shadows of doubt remain. There are voices warning that the triumph may be short-lived. Among them are analysts from IS, who remain skeptical about the Cedi's staying power. There are reasons for caution after this spike. They point to falling oil and cocoa prices and forecasts from the IMF that hint at a potential depreciation looming on the horizon. So, the question remains, has Ghana truly rewritten its economic destiny? Or is this just a brief moment of triumph before old challenges return? Now, if you take a closer, more critical look at what these analysts have been saying about the Cedi's rise against the dollar, you'll notice something interesting. Almost every one of them has pinned Ghana's currency surge on external factors, like skyrocketing gold prices or the IMF bailout that took place under the previous administration of President Akufo-Addo. But here's what's fascinating. Not one of them seems willing to entertain the idea that the Cedi's remarkable turnaround could be driven by the new government's own policies. It's ironic, isn't it? These are people who proudly call themselves analysts, implying they're supposed to be objective, fair, and data-driven. Yet when it comes to Africa, a deeply rooted bias often clouds the lens through which they see the continent. To many Western eyes, Africa remains a place that constantly needs saving, a place defined by crisis, not capability. And so, it's perhaps no surprise that these US analysts rush to explain Ghana's success as a lucky side effect of global commodity prices or foreign aid programs, rather than homegrown leadership and reforms. In the same breath, they're also quick to blame external forces, like the drop in oil and cocoa prices, for why the Cedi might fall again. It's the same old narrative. Africa as a passive player, never the master of its own fate. But Ghana's story today suggests something far more powerful and far more complex is at play. And maybe, just maybe, it's time the world starts giving African nations the credit they deserve. Well, for now, all the world can do is watch and wait to see whose predictions come true. But one thing is certain. As the governor of the Bank of Ghana has wisely warned, this is no time for complacency. Across the ocean, those same analysts are keeping a close eye on Ghana, quietly anticipating a stumble. Many of them are eager to point to the fall of the Cedi as proof of deeper economic troubles. And if we're honest, their reactions reveal a truth we already know. There are those who, despite their polite words, would rather not see Africa succeed. But Ghana has a different story to write, and it's up to the country to prove them wrong. The governor of the Bank of Ghana captured it perfectly when he said, "Stability doesn't mean fixation." He explained that while a strong currency brings benefits, it can also be a double-edged sword, especially when it comes to exports. Economists know that if a currency becomes too strong, it makes a nation's exports more expensive and less competitive on the global market. Yet there's hope. There's a delicate balance to be found, and many believe Ghana can achieve it. President John Dramani Mahama himself has emphasized the need for caution. He's warned that an overly strong Cedi could actually harm Ghana's exporters, undermining the very progress the country has fought so hard to achieve. In his view, the sweet spot lies somewhere between 10 and 12 cedis to the US dollar, a range that would keep both importers and exporters afloat while preserving the nation's economic competitiveness. Beyond interest rates or currency interventions, President Mahama knows the true strength of Ghana's currency will ultimately depend on something deeper: the country's commitment to structural reforms, good governance, and smart economic management. So the question remains, can Ghana maintain this balance and show the world that Africa is ready not just to survive, but to lead? As we look ahead to the next few months, one thing is clear. President John Mahama and his administration deserve recognition for the bold decisions and progress they've achieved so far. In just a short span of time, President Mahama has shown that he's not just talking about change, he's delivering it. His actions have proven that he's deeply committed to improving the lives of the Ghanaian people, and in many ways, he stands in sharp contrast to his predecessor. The previous administration under President Akufo-Addo has struggled to point to a single significant achievement during its term, a period marked by growing discontent and economic hardship. For President Mahama, however, the mission is different. His presidential campaign was built around addressing the harsh realities facing Ghana's economy. Under his predecessor, the country was burdened by mounting debts, ultimately leading to a historic default in debt servicing and the need for an IMF bailout. Beyond the debt crisis, Ghanaians were grappling with soaring inflation, chronic youth unemployment, and the environmental devastation caused by illegal gold mining, a practice known locally as galamsey. Mahama stepped into office determined to tackle these challenges head-on. And now, with the Cedi's resurgence and signs of economic revival, he's starting to turn his promises into reality. But the road ahead remains long. The question now is whether Ghana and President Mahama can keep this momentum alive and truly transform the nation's future. Yet, only a few months into his term, President Mahama has already achieved so much in steering Ghana toward a brighter future. His bold policies have begun to reduce the nation's towering debt, ease inflation, and spark a wider economic revival. If Ghana can keep this momentum going, there's little doubt it could become a powerful example for the entire continent. A model of how transparent governance, strategic reforms, and favorable global winds can work together to transform a nation's destiny. And the current success story unfolding in Ghana points to a far bigger truth. African countries have everything it takes, not just to compete with the West, but potentially to surpass it economically. For too long, the world has underestimated Africa's capabilities. Ghana's rise is proof that the tide is turning. Meanwhile, President Ibrahim Traoré of Burkina Faso has sent a heartfelt message congratulating President Mahama on this remarkable achievement. It's not entirely surprising, given how close the two leaders have grown since Mahama took office. Many still remember how President Mahama worked to restore diplomatic ties with Burkina Faso after those relations were nearly shattered under the previous Ghanaian administration's wild accusations. Since then, the friendship between Ghana and Burkina Faso has only grown deeper, with the two countries signing several important trade agreements. It's clear that leaders like President Mahama and President Traoré are precisely the kind of visionary figures Africa needs to secure a better future. So, what do you think about Ghana's astonishing economic turnaround? Let us know in the comments below. And if you enjoyed this video, don't forget to like, drop a comment, and subscribe to our channel for more stories that redefine the narrative of Africa.